This right here is the most significant piece of news that can affect your investments. Not Donald Trump getting elected president, not Bitcoin hitting 100K. This report from Goldman Sachs, which says the S&P 500, the most trusted investment, every default investment people talk about, this one is going to only deliver a 3% annual return from 2025 into the future. That is huge, and it means big things have to change for you and how you're investing. Now, in today's video, I'm going to break down your options. So many of you are overinvested in the stock market, and particularly S&P 500. You need to know what else you can do. I'm going to break that down in today's video. I'm Matt Sorensen. Let's build wealth. Now, this report from Goldman Sachs is 32 pages, but the headline is annualized returns for the S&P 500 will only be 3%. After taking into account inflation, it's only 1% real growth. They go into extensive detail on this. Now, you might disagree with Goldman Sachs, but I'm just saying this is the largest, most successful, most trusted financial institution in the world, and they're saying only 3% annual returns. That's got to scare you because you need to do more on your investments. You need to get a better rate of return if you want to have a retirement that you're actually looking forward to. Now, I've got some ideas and things I want you to consider here. Let's break them down. The first thing I want you to know is you do not have to just be invested into the stock market. This includes your IRA and 401k. So many people just invest into the stock market and buy stocks, bonds, and mutual funds, or an index fund like the S&P 500. That's fine. Those are great places to invest, but I want you to consider these quote-unquote alternative assets like real estate, small business, private equity, precious metals, crypto. I'm going to talk about those here in a minute, but I want you to consider those options as a place to invest in and to build and grow wealth. Now, wealthy people are already investing in alternative assets and are doing so at a significant percentage compared to the stock market. This is a report from Ernst & Young that shows those that have a 10 million or more of investable assets, they invest 85% of those dollars into alternative assets and only 15% in the stock market. Do you want to know what someone that has less than $1 million of net worth invests into the stock market versus alternative assets? 86% into the stock market, or ETFs like the S&P 500, versus only 14% into alternative assets. Now, a lot of people hear those stats like, well, the more money you have, the more things you can put into alternative assets. I kind of take the opposite view and say, well, maybe I should be doing what the wealthy are doing. They're building and growing wealth. Maybe they're getting better returns by investing in alternative assets than just being in the stock market and ETFs. And so if I'm someone less than $1 million, maybe I should be allocating more into these alternative assets. Now, I want to break down some of these common asset classes and go over some of the pros and cons and benefits to them. Because let's be honest, you can go from the stock market and ETFs into alternative assets like real estate, private equity, small business, crypto, and you can pick loser investments in the alternative side as well. So I want to go over the pros and cons of these and talk about them so you can distinguish them from an ETF. Now, the nice thing about an ETF or a stock are those are pretty liquid. Like if I want my money back, I can get it tomorrow. Now, the big concern right now, and this is the Goldman Sachs report, is are they overvalued? Am I really going to get additional returns in 2025 moving forward? Or is the S&P 500 already so overvalued, I'm not going to see any growth in my investment portfolio? I mean, that's Goldman Sachs' position. So where else should I be deploying my capital? Well, the most common place people invest is real estate. That is the most common alternative investment. Now, the benefit to real estate is I can put less money in and I can get greater investment assets by leveraging with debt. So for example, if I bought a rental property for $500,000, it might only take a $100,000 investment and I can get a loan of $400,000 to buy that $500,000 asset. Then when that rental property goes up 10% in value, up $50,000, that's actually a 50% return on my $100,000 investment because I'm getting the appreciation on the $100,000 I invested plus the debt leverage I have of $400,000. Now, the other reason people like real estate is I get cash flow off of the real estate. Whether it's a single family property or I invest in a multifamily deal or a private fund on real estate, I'm getting the cash flow on the rental income. And then the third thing on rental real estate is there are tax benefits. So a lot of times I can be cash flowing on the property, like getting money into my bank account, but because of depreciation losses on my tax return, it shows a loss. So I end up actually not paying any taxes, even though the property's going up in value and I'm cash flowing and getting money in my bank account. Now, the downside and the con to real estate, and this is if you're investing in single family rentals, is they're not as liquid. Yes, I could sell it, but it might take me 3 to 6 months to sell the property. The other downside applies if I'm investing in a real estate fund. Maybe I'm in a private REIT or a private real estate fund. I've invested in a deal doing commercial or multifamily type real estate, and I might be locked up in that deal, and it might take me 6 months, a year. I might even have to wait 5 or 7 years until that property sells to get cashed out and to realize the return on my investment. So real estate is a lot less liquid, of course, than investing in the stock market or something like an ETF. Now, the next category you could invest in is just investing in businesses, and there's a lot of different ways you could do this. Business world of things, we've got private equity, which are established existing businesses, a little less risky because these are established businesses with revenue and profit. And then the next type would be venture capital, more risky, of course, because I'm betting on companies that don't even have customers or products yet. And so there's going to be some failures in there, but hopefully if there's a win, there's a big win like an Uber or whatever that's going to make up for the losses. And then the third one is small business. Now, most small businesses do fail. A lot of times it's your time and some of your money that you may risk to lose, but it has been one of the most common ways to grow and build astronomical wealth. So we've got to leave that one on the table, investing in small businesses or starting one where you're putting in your time and your money. Now, the last group here I want to touch on is oil and gas investing, crypto investing, and precious metals investing. These are different assets people invest into. They want to get return, appreciation, and asset. The oil and gas investments can create a stream of income. Precious metals, you're hoping they go up in value, whether that's gold or silver, or whatever precious metal you're investing in. And then crypto, you're investing in the technology or the appreciation and value. Maybe it's a store of value concept or investment thesis you have like Bitcoin, where you're investing in a store of value, digital gold, whatever your belief is in that. Now, oil and gas is a little unique because there's something called the intangible drilling cost tax benefit you can take on your return. Where, for example, if I invested $100,000 into an oil and gas deal that's exploratory and they're drilling for wells and things like that, I can take that $100,000 or a portion thereof and take the write-off on my tax return. Now, you want to talk to your tax lawyer, CPA on that. Make sure the specific oil and gas deal you're investing in has that benefit. There are some oil and gas deals that are more working interest or royalty plays where you're just getting a stream of income. It's not more exploratory or drilling. And those investments where it's just a royalty or stream of income, you're not getting that tax benefit. But the tax benefit there that you can get is really just a perk. It's not the reason to do an oil and gas deal. I would do an oil and gas investment if I believed in the income I could receive off of that was greater than my other investment alternatives that I had to choose from. Now, some of you might be thinking, Matt, I love these investment concepts. I love these different areas that I can invest my money and grow and build wealth, but all my money's in my IRA or 401k, so I can't do this. Well, you're wrong. You can use what's called a self-directed IRA, and that IRA account can invest into real estate. It can invest into a small business, into private equity, into a venture capital fund, into a real estate fund, into crypto, into precious metals, into oil and gas. It's something we do every day at my company, Directed IRA. Your IRA and 401k does not just have to invest in stocks, bonds, and mutual funds. It can. And if you have a broker-dealer IRA or an IRA with the bank, that's where they're going to make you buy, but that's not all your IRA can invest into. You need a self-directed IRA, which you can transfer your broker-dealer IRA over to a self-directed IRA with Directed IRA. And now your account could go invest in crypto. It can invest in a real estate deal. It could be single family, commercial, multifamily. It can invest in a small business or a startup or a VC or PE fund. These are all assets your IRA can own, and they've been able to do that since the 70s. The problem is broker-dealers don't let you do that unless you're an ultra high net worth investor or client with them, because they want you to just buy what's on their menu of options, stocks, bonds, and mutual funds. But using a self-directed IRA is a way I can get access to alternative assets using my IRA or 401k dollars. I've got a video here that goes over how you can do that. I have an entire podcast on it. I wrote the #1 book, the Self-Directed IRA Handbook, that outlines how you can do this. So this is a strategy I want you to consider also for your IRA or 401k as a way to build long-term wealth. Now, we have a significant amount of resources on our website, directedira.com, but click this link here. You can talk to one of our experienced team members to go over the process of setting up a self-directed IRA to invest in these alternative assets, whether it's real estate, crypto, small business, private equity. All these asset classes I talked about are things you can own in your IRA, health savings account, Roth IRA, SEP IRA, solo 401k. And for more tips and strategies on how to build and grow wealth, please make sure you're subscribed to my channel. I'm Matt Sorensen. We'll see you next time.